Alright guys, in this video I wanted to do something a little bit different, and that is take a look at how to trade stocks. Okay, I get a lot of emails from you guys about looking at stocks and trading stocks, and personally I've never been a huge fan of trading stocks. I always feel that there's going to be a lot more action in the forex markets and the futures markets, but I fully understand that a lot of you guys trade what you're comfortable trading, right? And a large majority of you guys only trade stocks, and that's fine. So what I've tried to do in this video is I've tried to come up with a stock that meets the volatility requirements for my DynoBars Pro trading software, and I was able to put together a list of some of the most heavily traded stocks and of course the high dollar value stocks. And what you can see on the screen right now is a chart of Apple. Okay? Now other stocks are going to work fine too. Stocks like Netflix, Tesla, Facebook, all those are very high value stocks and they have a large intraday range, but I found that Apple has a pretty decent spread and the intraday moves are, $4 to $10. So if you're trading 100 shares of Apple, your potential could be anywhere from $400 to $1,000. Win or lose, right? And hopefully you win if you manage your risk properly and do all the other things necessary. It's a great stock to trade. So let's just take a look at some of these entries here, all right? This is going to be a short video. We're really just going to look at the setups, what to look for, and how to get in on this trade, okay? So when you're trading stocks, ideally you want to have some kind of trading bias, right? Whether you're long or short, you want to have another primary filter where you decide what direction you want to go. Right? As an example, you may simply look at, all right, well, this stock is due for a bounce, or this stock is gapping up today and gapping up hard, right? Those are all concepts that are unique to stock trading, and you won't really find that in Forex and futures because there is no such thing as a gap up in the Forex and futures markets, right? That's typically only in stocks. So if you were trading Apple today, you were really only looking for long signals, then let's just highlight these 4 bars here, all right? This bar here, this bar here, this bar here, and this bar here, all right? Those are what I call your signal bars. You need some kind of signal that notifies you, all right, it's time to start watching for a setup, okay? Now, me personally, I like to have more than one filter when I enter a trade, all right? And one of the things that I like is the retracements, okay? And what I've noticed when doing my back testing and my statistical analysis, some of the best signals happen when you wait for a percentage retracement of the bar. You get what I'm saying? So as an example, maybe you only want to consider taking a trade if you get a 30% retracement of the signal bar, or a 50% retracement of the signal bar, or whatever percentage you decide is appropriate for your market, right? I personally like the 30% retracement level just because it's not too shallow and it's not too deep. It's kind of right there in the sweet spot, all right? So out of these 4 potential long signals that you get when you're looking at a chart, well, only this bar right here and this bar right here gave you a 30% retracement. Okay, so let's just go ahead and draw the 30%, which is right there and right there. Sometimes you kind of have to eyeball it, but you guys kind of get the picture, right? So let's just go ahead and recap these steps, all right? Number 1, you always want to have a trading bias. What direction do you want to go? Do you want to be a buyer today, or do you want to be a seller today, right? Once you've made that decision, then you want to wait for these signal bars to show up on your chart, okay? And if you've optimized your charts correctly, you're only going to get a handful of these signal bars, which makes them very, very valuable. And to really manage your risk and cherry pick only the best entries, ideally, you want to just select a percentage retracement that you feel comfortable with, right? And there's no right or wrong answer for this. Like I said, it could be 30%, it could be 50%, it could be 90%. Totally up to you, okay? I'm using 30% because that's something I personally feel very comfortable with when I've been looking at stocks, right? And I'm only talking about the big stocks, the volatile stocks that move every day and that give great signals daily, weekly, monthly, right? Those are the big boys: Apple, Netflix, Facebook, Tesla, I'm sure there's dozens of others, but these are the ones that I've looked at because I love tech stocks. I feel that tech stocks have the greatest volatility as of right now where we are in the market. Okay? Anyway, once you've figured out your retracement percentage, that's really going to help you filter out only the best signal bars. And you can see here we've taken 1, 2, 3, 4 potential signals and we filtered it out to just 2 of those 4, right? And of course, the last question is, where do you place your stop? Well, on stocks, we do it a little bit differently. At least this is what I have found to be a little bit more efficient on stocks versus Forex and futures, okay? On stocks, what you can do is you can simply go long once it tags your retracement zone or a little bit below it, and you can place your stop a few ticks below the low of the signal bar. You see what I'm saying? So your stop would go in somewhere over here, and your stop would go in somewhere over here. Do you guys get what I'm saying? In my back testing, I have found that when trading stocks, especially, 100 shares or a couple hundred shares, you don't necessarily need to draw trend lines like you would with Forex and futures. Now, I still think drawing trend lines is a good idea. I still think you should have the T-bar charts open. You should be drawing your trend lines and you should be taking entries that way. But like I said, guys, stock trading is a completely different game than futures and Forex. In my technical analysis of trading stocks, I've just found that the trading bias is more important. So let me just go ahead and write that down there so you guys really hammer this home. Your trading bias is important, okay? So that's really it, guys. I think this is a very simplistic take on how to trade stocks, specifically using the use case of Apple stock. And I think the risk to reward profiles, when you implement a method like this, it's a lot safer than looking at any other chart style like candlestick charts, Renko charts, whatever charts. These price action based charts I think makes a huge difference. And you can see in both of these potential trades, this stop never got hit and this stop never got hit. So both of these happen to be winning trades today. And you can see the time here, 12 p.m. Chicago time. You're pretty much done by lunch, right? So what's the takeaway here? Well, number one, guys, don't forget your trading bias is important. Number two, remember to wait for the retracement and select a retracement percentage that you think is suitable, right? Don't ask anybody else. Don't ask the guy next to you. Don't ask your buddies. You do your back testing. You do your statistical analysis. You figure out what is the best retracement percentage to wait for, right? And every stock is going to have its own measurement, right? I have found that 30% is great on Apple. It may be 35% on Netflix. It may be 50% on Facebook, right? Every stock is going to have its own flavor, okay? And of course, guys, the last piece of business, never ever forget to place your stop, okay? Stops are what keeps you honest in trading. Think about all the times you've blown out your account or you've taken a trade and it just really pissed you off. Well, chances are you probably didn't use a stop. A stop lets you take the small loss instead of taking a big loss. Okay? Stops keep you in the game, and using a stop is what makes you a professional trader instead of just a gambler. Okay? Anyway, guys, I hope you've enjoyed this short video on how to trade stocks using our case study of Apple. If you have any questions on how to trade stocks, feel free to get in touch. And of course, if you guys want to share your own method on how you guys trade stocks, feel free to throw it in the comments section below. Guys, thanks for watching this video. And as always, best trading wishes.